So, what if one of the biggest AI growth stories on the market today was just hiding in plain sight? What if everyone was so busy looking at the giant tech companies that they completely missed a key player? Well, that's exactly the mystery we're digging into.
You look at the AI space and you see these absolutely astronomical valuations, right? Companies trading at 30, 50, sometimes even 100 times their revenue. So what gives when you find a company that seems to have a similar growth path but is valued at a fraction of that? Is the market just missing it? Maybe because it's a UK company flying under the radar in the US? It's a real puzzle, and it's got some of the biggest names out there. We're talking Citadel, BlackRock, taking a much closer look. So today, we're basically going to be detectives. We're going to piece together the evidence for a mystery company that seems to have all the right ingredients for an AI giant, but its valuation just doesn't seem to add up. Okay, let's dive right in. We're going to build the case here by looking at three core pillars that tell the story. First, it's absolutely jaw-dropping financial goals. Second, it's partnerships with, let's be honest, tech royalty. And third, a massive game-changing acquisition. Okay, first pillar, the numbers. Let's start with this one. $350 million. That's the company's official revenue guidance for 2026. For a company you've probably never even heard of, that is a huge number. Let's break down the growth that gets them there. Now, what's really wild here is the sheer speed of this growth. We're talking about going from $40 million in 2025 to $350 million just 1 year later. That's almost 10 times growth. And get this, they plan to exit 2026 at a run rate of $500 million in annual recurring revenue. This isn't just gradual growth. This is like hitting the accelerator and just flooring it. Pillar number 2, partners. You know, this kind of growth doesn't just happen in a vacuum. You need some powerful friends. And this company has two of the biggest you can possibly get. Yep, we're talking about deep strategic partnerships with both Microsoft and Google. And look, these are not just logos on a PowerPoint slide. The Microsoft deal means their tech is built right into the Azure cloud, and Microsoft's own sales team is out there selling it with them. The Google partnership, even more direct. Google is actively reselling their software, and they expect that one channel, just Google, to bring in over half of their total forecasted revenue. Think about that. Both tech giants are putting their full weight behind this company's technology. And that brings us to our third pillar, a massive $250 million acquisition. But honestly, the price tag isn't even the most impressive part. The real story is how they paid for it. So the crucial point here is that this was a non-dilutive all-cash deal. What does that actually mean? It means they didn't print a single new share. They didn't water down the value for their existing shareholders. They just paid for it straight from their own cash reserves. For a company at this stage, that is incredibly rare and signals some serious financial confidence. And this wasn't just some random acquisition. By buying a company called Reward Loyalty UK, they instantly bolted on about $90 million in profitable revenue. But maybe even more importantly, they bought a platform that was already embedded with hundreds of global retailers, dozens of major banks, plus they got strategic partnerships with the biggest payment networks on the planet, Visa, MasterCard, and American Express. Okay, let's just take a breath and recap the evidence. We've got staggering 10x revenue growth, deep sales partnerships with both Microsoft and Google, a $250 million acquisition paid for in cash. So, who is this mystery company? The company is Rezolve AI. It's a UK-based firm that trades right on the NASDAQ under the ticker RZLV, all those numbers, all those partners, and that massive acquisition. It all belongs to them. So now that we know the who, let's get to the how. A company doesn't just accidentally land deals with Microsoft and Google or get over 650 enterprise customers. It all comes down to the engine that's driving these numbers, their core product, something they call the Brain Suite. Their tech is built around this really powerful idea called Agentic Commerce, and they're tackling one of the biggest headaches in e-commerce, the fact that 70% of us, you, me, everybody, abandon our shopping carts. You know how it is. Their AI agents are designed to turn that frustrating, click-heavy process into a simple conversation. It's like asking a real person for help, and they not only find the product, but handle the whole checkout for you. Now, the Brain Suite itself has 3 parts that all work together. First is Brain Commerce. That's the discovery engine. It's a crazy powerful conversational AI that understands you in 95 languages, whether you type, speak, or even show it a picture of what you want.
Then Brain Checkout is the finisher. It makes paying a seamless, one-tap process. And the foundation for all of it is Brain Power, which is their own specialized large language model trained specifically for commerce, not just scraped from the entire internet.
So, look, the story sounds incredible, right? But let's be real, no investment is ever a sure thing. And to get the full picture, we have to look at both the super bullish case from Wall Street and some of the very real concerns that investors and even the company itself are talking about. And this slide really captures the tension at the heart of Rezolve. On one side, you have 6 Wall Street analysts with a strong buy rating and an average price target of over $11. I mean, that's hundreds of % higher than where it's trading now. But on the other side, you have investors asking some really tough and frankly very valid questions. How much cash is actually left after that massive acquisition? Can they really manage this explosive growth? And are they going to have to issue more shares down the line to pay for everything?
And hey, to their credit, the company is super transparent about these challenges. You can go read their official SEC filings. They openly acknowledge their history of losses, they point out how much they rely on those key partnerships with Microsoft and Google, and they say they might need to raise more money to fund their big plans. These are the classic risks you see with any high-growth, early-stage company trying to do something huge.
And that all brings us right here, to today, March 30th. It's why there's so much focus right now. Rezolve AI is set to release its full-year financial results, and this really is a moment of truth. Are the hard audited numbers going to back up this incredible growth story they've been telling us? Or are they going to give more weight to the risks, leaving all of us to wonder if this AI company is truly a hidden gem or if the mystery of its valuation is still waiting to be solved?